Hello, all my lovely people. Thank you all for being here. Happy Friday. Today, we're going to talk about big spikes. And everything that I've been talking about for the last 2 months really matters. And I want to thank everybody for being here. Let's jump in. My audio is working. Good. And as you know, the story today is not only just Happy Friday, but thank you also to everybody on Patreon. It's been a interesting week. And I had a lot of outpouring of gratitude and love. A lot of crypto people who bought their first stocks for the first time in their lives this month. And it happened to be Tesla, and everybody's very happy. And it's behaving like crazy, but it's not just that. It's many other elements of the stock market. You know, I spent a lot of time talking about fundamentals, and last year fundamentals didn't work. This year, they are working. So let's jump in. Of course, this is just edutainment, as you know. And the story today, real quickly, big story of how equities have gone from zero to hero in just a few weeks. And what are they sniffing out? It's fascinating to see the huge jumps in things like Nvidia and Tesla. You have equities moving faster than cryptos. Today we'll talk about a little bit about correlations, performance, and the big story of how the market is reacting, what the market is sniffing out, and why some people are still in disbelief. And again, I've been stressing for the last 2 months, things like history, things like being on the train for the key 30 days over the last 30 years has an 80% impact on your portfolio. And I've been trying to urge people to, not being so fearful. Yes, 2022 was bad, but this year has all but made up for it already in the first month. It's been bonkers. So let's look at year-to-date performance of crypto. You can see here, Bitcoin has been outperforming. This is everything since January 1st divided by Bitcoin. You can see, of course, Bitcoin's flat. But Ethereum has underperformed Bitcoin by 3.45%, which is a bit of a shock. XRP underperformed a lot. Doge, Litecoin, Binance, etc. But the dark greens, you can see Solana, Avalanche, Near, Filecoin, HBAR, all dark green, which is 30% plus returns. And then you have Polkadot, Cardano, ICP, Matic, all in light green, not moving as far or as fast. Let's switch gears and see the performance year to date for some of these names. Huge, 39% for Bitcoin, 33% call it for ETH, Binance 24%, and a lot of other huge moves across other big names as well. So it's been an interesting January so far, and we're going to talk more about the meaningful nature of January. Let's talk about Bitcoin first. Let's look at the hash rate. This is from the top and bottom indicator. You can see hash rate is up an all-time high. And I always try to find patterns and numbers, but the hash rate for Bitcoin is up 5,000% in 5 years. And it just hit a new all-time high today, which is stunning. Okay, but that makes it harder, puts pressure on miners, but it's not stopping them from plugging in their machines. Let's look at correlations between Nasdaq and Bitcoin over the last 90 days. Again, a lot has happened since October 31st, but you can see here how at the beginning of November, we had the big dip. You know why that happened. But Nasdaq, interestingly enough, has been flat since October 31st. But Bitcoin is up 10%, and you can see that big spike over the last week or so. And that is interesting what's happening. Now, there are elements of the Nasdaq that are doing extremely well. And that's why I say, look at your index for an indication and a guide. But you have to look at the elements to understand exactly where things are going. So let's talk about a little bit of crypto news before we jump into the big story. Polygon, their zkEVM is coming soon. Sandeep Nawal recently tweeted that the anticipated addition of the zkEVM update to the network has an official date, and it will be happening soon. So a lot of people are getting very excited. In fact, Polygon has gone up 20% over the last week to 10 days. I entered a little bit of a position early in January, and it was languishing for a while, but it's good to see it's moving. The question is, how far will Polygon go this cycle, and how much will they take on? Because we're keeping a close eye as well on some of the Polygon killers that are out there. Now, if people want me to do a quick video on Polygon, a quick update, let me know in the comment below. I work for you all. Next, let's talk about Solana. Their dApp store has launched. Attention mobile developers announced that the Solana dApp store is now open for app submissions, and mobile devs can now submit early before Saga shipping. And sometimes when it comes to such a store, getting in there early, getting reviews early can really bubble you up the charts. So if you are building mobile apps, think about jumping in there. That's going to be huge. It's going to be a game changer for the whole ecosystem as we go forward. Now, let's talk about the big story today. And I did talk at the beginning of January how the first 5 days of January are critical as a barometer for what's going to happen for the next year. And I went back through 70 plus years of history, and I proved to you that it was a very, very good omen. But this is the second one, and of course, we all have to be scholars of history. This is what's called the January barometer, and it's akin to the first 5 days, as I mentioned before. But looking at this, it says basically, as January goes, so goes the year. And this is true, I think, a huge 86% of the time, which is good. But when January is greater than 5%, it turns out the final 11 months do even better, up about 14.2% on average. And January is currently up 5.8% with 2 days to go. So not doing too bad so far. So very interesting numbers and very interesting history there as well as we go forward. And this stuff, literally, it doesn't work 100% of the time, but it works more than 80% of the time. And I believe in Pareto efficiency. An 80% win ratio is good enough for me. So good enough to get me on the train for sure. Let's talk about equities year to date. Here are some of the big movers. You can see Google 14%. We'll talk about Google in a minute too. Meta had a huge move this year as well. In fact, caught many of us by surprise. Amazon up 23%. Tesla up 46%. In fact, from the bottom to the top, it's up 70% just over the past couple of weeks. Apple rebounding. What's interesting is Microsoft hasn't budged at all, considering all of the AI bluster that's going around. Nvidia, great company, up a massive 40% as well, only beaten by Tesla. So the market is on the move. One area right there in the middle is pharma, Johnson & Johnson, Lilly, Pfizer down a whopping 14%. Maybe the gravy train times are over for the big pharma companies, and I won't talk any more about that, but you guys know what I'm saying. Now let's talk about where we are in terms of the market. Big thank yous out to Sanjay for sharing this with me. Charlie Bolello mentioned we are right here currently at S&P 500 4,060. We are 16% below the all-time high and 16% above the October low, the 3,500, which we spoke about a lot, being the bottom, and that is middle of the road. So the question is, what happens next? Do we hit the new high of 4,800 or do we go back below 3,500? And the answer, of course, I'm not even showing it because you can guess what the answer is. The answer is because there's still so much bearish sentiment. The majority, about 60%, are saying lower low. And it's not only the people on Twitter, but also the people in crypto. Many are calling for lower lows. I mentioned that yesterday. It caused some consternation, but they'll come around. I'm pretty sure, because all the indications are there. And let me dig into a couple more. First of all, the most important thing, the stuff we've been watching, monitoring, thinking about where we are. This is the Fed funds rate. We had the core PCE come out today. It was positive, but the Fed funds rates are now above PCE prices, which is core inflation, for the first time since February 2020. And this is exactly what the Fed has aimed for. Positive real rates through the yield curve, and therefore many people assume the pause is imminent. It's coming. We just don't know when. They'll do 25, maybe another 25 after that. Most probably. Either way, it doesn't matter. It's peanuts compared to what we're already at. But at least a max of 50 basis points for now. Then it'll be stop. Then they wait from the liquidity crisis. There's some really bad unemployment numbers, which I'll talk about in a minute too, will come out. There was a very interesting study actually where they looked at the unemployment numbers, the employment numbers, the gains for Q2 2022. And the government said they posted 8.2 million jobs. Well, they just revised that to minus 267,000 jobs. So they're data-driven, but the data's wrong, and it's dated, and it's lagging, and it's just a whole mess. But this is something that we can kind of take to the bank. This is why I think everybody's going risk on fast. This is why Nasdaq and tech stocks are outperforming all other sectors really, really quick. And just look at the gainers. Tesla was at 106 a few days ago. Now it's just bounced off 180. That is insane for a company that size, over $500 billion, to go up so much so quick is bonkers. Anyway, let's talk about the disconnect. This is from Jurian Trimmer from Fidelity. He puts together some beautiful charts. And the market continues to price in. If you look at the yellow line, it's kind of the SOFR curve where the market thinks they're going. And the purple dots are where the majority of the Fed think we're going. And you can see the massive disconnect between the purple dots and the yellow line. And the market continues to price in a very fast pivot from a terminal rate of maybe 4.755% to less than 3%. And per Jurian, he thinks it's really hard to imagine that this scenario will play out without a recession, which would prove current earnings estimates are way too optimistic. Yes, I do believe there are many companies out there that will have terrible earnings seasons, but the winners, the recession-proof stocks, you know who they are, they're going to do just fine. And that's just the nature of the beast. Now, I was going to call this video Extreme Greed, but I thought it sounded bad. But this is where the markets are flipping. We are on the verge of extreme greed right now. And this is the equity markets, the CNN indicator. It just shows you how fast we have come up. In addition, we've had a massive bullish swing away from puts since December 2022. Just a month ago, people were buying puts like they were going out of fashion. You can see the put-call ratio is about 1.25. Now it's coming in at 0.8, which is more like an average number, more of a bullish sign for the markets. And we talked about options for crypto yesterday, and these are for equities. So again, more bullish indicators that the market is really going risk on fast. Now, a little bit of political Tesla news. Musk met Biden officials. I think he met with John Podesta, Mitch Landrieu, and they discussed shared goals around the electrification of the United States and a bipartisan infrastructure law and Inflation Reduction Act to advance electric vehicle production, charging, as well as the broader cause of electrification. And this is positive. And I've never seen Elon Musk in suits on so many subsequent days, been in and out of courts, working around the clock. The guy must be exhausted. But it was very good to see him there meeting with Biden officials, because Biden snubbed him a couple of times, talking about General Motors being the company that's changing the world and bringing the world to EVs, etc., which is complete BS. It's just pandering to unions. But anyway, it was good to see this step happening. In addition, more Tesla news, because Tesla has been on fire so far this year, despite the very brutal year with all of the stuff that happened last year. But Model Y was the fourth best-selling car in the world in 2022. It had about 760,000 cumulative sales. And last year in 2021, it was ranked number 15. So it's gone up a massive amount in a very short window of time. Production volumes up 88%. It was also the number one in terms of revenue, not number fourth best-selling car, but number one in terms of the revenue for those 760,000 units. And that was huge. Now, in sixth place, one of the top leading cars and most common cars that were sold in the United States, things like Toyota Camrys, they had about 670,000 units, and the Honda CR-V 600,000. What's interesting is the Honda CR-V sales fell by 18%. Toyota Camry sales fell by 3%. Again, the ice is melting. It's crumbling down, and EVs are coming. I love them or hate them. It's the nature of the beast. In addition, some Danish news. The CEO of Denmark's largest leasing company, Nordania Leasing, told reporters they have signed more Tesla new leases last week than they did in all of 2022. And it was basically as a result of the price cuts. And that takes us to the whole notion of the economics, the elasticity of price. People who buy cars, or people even lease cars, are very price sensitive. And a couple of $1,000s, like a 5% cut, 6% cut, 13% cut, can mean drastic amount to what people buy. And this is why Elon said in the Q4 report, demand is not a problem, despite all the FUD last year. Demand as long as the eyes can see. Now let's talk about pricing and elasticity. This was a great Morgan Stanley article that was published, and they referred to it as being 1913 all over again. price cuts usher in the great EV deflation. Now, their price target on Tesla is 220. At this rate, will probably be there next week, which is insane. But again, it went from 103 to 180 in a very short window of time. But Model T from Ford Motor Company did the same thing, the price cut strategy, because they got so good at making cars on the production line. They cut the price by, I think it was 40%, just in a very short window of time, which of course clobbered everybody. But at the time, the Model T, even after the 40% cut, was priced at about $825. In today's world, that's over $80,000. But the interesting thing, and the reason I state these numbers, that's so fascinating, that in 1913 and today, the US dollar has debased, guess how many percent? 99%. So that's the other interesting angle. Let's also talk about some sad news. Auto delinquencies are on the rise. This is from Bloomberg Fitch Ratings. You can see that the percentage of borrowers at least 60 days late on their car payments is rising fast. It will break a new record. I am 1,000% convinced on this one. It's going to go far above 6%, and it's going to smash the industry. You've got all of these factors. Why are people going to make a payment on a car that they're underwater on? Because people are now buying cheaper Teslas, and that's brought down the secondhand value of all the vehicles out there. So it's causing a huge problem. Not only is it going to hurt ice makers in 2023, but it's also going to hurt those people holding the bags, the funding bags, the leases. They're going to get smashed too. And I've also spent a lot of time talking about credit card delinquencies, which are coming too. But auto is the next thing to hit. All thanks to Jerome Powell. He's breaking everything. And speaking of that, can Biden break up Google? The Justice Department unveiled its vaunted antitrust lawsuit seeking to break up Google's advertising business, a case that could reshape Silicon Valley and define President Joe Biden's legacy. Yes, we smash big tech. Why don't they smash big auto? I don't know, but it's crazy. But anyway, looking at how frivolous and silly this government lawsuit is, if you look at Google, they control, basically, yes, they do control more than a quarter of US digital ads, but it's only 26.5%. If they destroy Google, they're going to have to go after Meta and Amazon and everybody else. So it's not like they have 90% market share like big telcos did back in the day. So from that perspective, I don't think they're going to break up Google. So for those people holding Google, including myself, oh, by the way, let me know if you want me to do a detailed analysis of a lot of requests for Google versus Microsoft. Drop it below if you want me to dig into that. Now, sadly, as well, back to Jerome Powell and how we spoke about big tech and technology companies laying off first. Now you've got chemical companies like Dow are beginning to announce very big layoffs, as well as other names, more traditional names like International Business Machines, IBM, and others. And this is really, really sad that they are planning thousands of job cuts to prepare for what they call the darkening economic outlook, even as the labor market remains very tight. Remember, we have a structural change in the labor market. People went through the Great Resignation during C-19, and then this quiet quitting and everything else. So people just don't want to work like they did back in the old days, and the recession is coming again. Thanks, JP. Now let's talk about the dollar for a second. We did hint at it, but that it's debased 99% since the year 1913. But you can see the dollar has been dying over and over again since the post-Bretton Woods era of global monetary order, which began in 1971 or 52 years ago. And the dollar has been allowed to fluctuate freely against gold. And with that, the global currency regime is undergoing that 51-year period of price discovery. But yet, half a century later, the dollar is still the king in the universe of currencies. And as I mentioned per forward above, any fiat currency will debase like hell over time. But some of the other names here, you can see Euro, US is 50, call it 56%, Euro 18, the Japanese yen, call it 5, Pound sterling 4, and Pound sterling took a big hit late last year. Remember, it fell to nearly parity with the dollar. Swiss franc is 0.22, Canadian dollars 2%, and other currencies, actually Australia just under 2% as well. So you can see that liquidity does make a difference, and it is still the 800-pound gorilla. But these guys are looking to change that dynamic, and they've got plans for the dollar. But one thing we can say, though, is fiat debasement is 100% certain. I think Robert Breedlove said, Bitcoin is truth in a world drowning in political BS. Bitcoin is hope for those having their time systematically stolen via inflation. That being, I think, the 2% inflation when it's really at least 5% being taken out of your back pocket every single year for holding cash. Bitcoin never stops working, and it always does what it says it will do. And there's only 21 million, as they say. Well, I say never more than 15, 14. And that's where we are, ladies and gentlemen. So hang tough, be in a position, have this insurance. This picture here does tell me that the future will be backed by something harder, whether it's oil or another type of commodity or a super hard asset like Bitcoin. So make sure, even if you hate it, make sure you have a little bit. Gold may not and probably will not get you there. As I mentioned as well in a tweet earlier this week, gold hasn't gone anywhere in 50 years or 70 years. Crazy, crazy numbers. So with that, everybody, I want to wish you all a good weekend. Hit the like, subscribe if you learned something new today. And I want to thank all the mods in the chats too. Have a great weekend. I'll see you all tomorrow. Bye.